Next up, we have the dollar index here, DXY. So this is getting a little tricky, I'd say. So price did cross over this moving average. You can see there's a bunch of liquidity down here, and it has found support. It's finding resistance to the upside, which is pretty obvious because you do have this major zone. I'll delete this smaller one here, but you can see it is rejecting 104. We're going to move this up a bit because now it's 104 that is the is creating the issue for this index. So we'll look at this here. Oops, what did I do here? Just delete this. My bad. So here I'm actually going to extend this because it is important to see that it's been respected for a long time. So 104, 104, 104. A bit of a typo in the last one. So yeah, 104 is clearly providing some resistance to this dollar index, and now it is pushing back down a little bit. So we'll see what it does when it hits this area. It'll probably be next month. And then yeah, but I mean, as far as like if you look at daily structure right now, it's above the moving average, and it did cross over. And you know, since it hit this area down here at 92 and a quarter, or 99 and a quarter, sorry, it's been straight up, and then it did break this area as well, and then almost broke this area. So I would be definitely considering, you know, and like you can see, it's created like significant support at some of these levels. At this 103 level, you know, huge support. So I wouldn't be surprised if this pops up above 104 and, you know, continues to be bullish for a while. But you know, looking at this, as far as like any sort of trades and making any sort of long-term, you know, theories or statements on this, like for me, it's a little difficult because you don't, it's hitting this huge area of resistance here, but it's got this huge area of support, and it's right in between, right? So it's hard to like really dictate what this is going to do and then how it's going to affect the other prices for the other currency pairs and commodities and stuff. So I would need, for me to make a real decision on this, I would need price to break 104 or break 103 here, because they're both super significant, and until price does one or the other, it's really tough to decide where this is going to go, because for a few reasons. So if price breaks 104, I mean, it's probably good to go all the way up to like 105, 105.50 up here, and then which is dramatic. If the dollar gets that, you know, if the dollar gets that much stronger, then it's really going to push the other things down. But then if it breaks 103 here, and it, more importantly, not just 103, but this area of liquidity here, so between 103 and 102.60-ish, if it breaks that, I mean, that's a main support area, and then I'd say then we'd be below the moving average as well. So then I'd be like, well, it might actually just continue lower for a while, and I would probably reconsider it bearish. So those are kind of the two possibilities. It's got to break one of these, or else there's really not much. It's kind of really at a standstill, and then that's kind of, once it breaks one of these areas, then we can determine what it's going to do for the rest of the month. And then we're talking about next month here. So it does move about 4 points a month, I think. This says 3.7, so yeah, it's about 4. So if 104 is considered our high for the next month, let's say, then, you know, 100 even would be our low. This doesn't have to be perfect right now, but we'd be looking at something like this. So yeah, let's say price bounces here at 103 but cannot break this 104 area. Let's say it just continues down here into this zone and then pulls up here. You're looking at something like this. If it can't break that 104, I think by the time it hits 103, I think it is going to get I think it's going to get a good bounce at 103. I think there's just too much liquidity here for price to break through it with the first go, and I think you are going to get a bounce back. But then what could happen is it creates a lower, as it comes back up, it creates a lower liquidity zone right below this main one here, below 104 here. Might be like between 103.50 and 104 kind of thing, something like this. Probably where this huge wick is, to be honest. And this wick is, well, if you could see it right here. But anyways, I can create a lower liquidity zone and get stuck here and then fall lower. So it could be something like that. So we'll really see how this plays out. But as of right now, between 104 and 103, I'm just undecided. I think there's just not enough to go off of. And this dollar index is huge. So like if this again, if this breaks 104 and starts heading up, I mean, it's going to push gold down. It's going to push a lot of things down. Oil, all of this, you know, all the currency pairs, obviously, like pound USD will start going down. Euro USD will go down. But again, if it breaks 103 and it breaks this liquidity area, I mean, then those ones are going to go up quite a bit pretty quickly. So it's very possible. So because there is so many US dollars printed now, trillions upon trillions upon trillions, if that dollar gets stronger, it has significant impact. And if it gets weaker, it also has significant impact. So the more dollars that are printed, and then depending on, you know, the strength relativity of the dollar, like that can really move markets. So this I'm going to pay a lot of attention to. I'll keep you guys updated. Just let me know what you need from me in the comments, and I'll see you in the next one.